Good morning, good evening, good afternoon, wherever you are in the world. Welcome to another episode of LunarCrush Live. I'll be bringing up the man, Mariano, aka the Trading Parrot. He'll be hanging out with us again. He was up, I think it was just a couple of weeks ago, but I had such a good time chatting with him about charts and Bitcoin. And he does a lot of technical analysis and a lot of stuff that I'm not good at and don't understand that well. And so it's really great to bring him up to talk about stuff. If you're paying attention out there, it's a little rough today. Bitcoin hanging out at 66, Ethereum down to 34.5. So hopefully you're hanging down there, but we'll hopefully have some good insights for you to talk about and to learn a little bit. So without further ado, there he is. What's up, my man?
Hi, Joe. How are you doing? It's a
Good.
tough morning for people that are unprepared, I guess. I could say that.
Yeah, it's just like it felt so it was interesting. It felt so bullish right there, just like kind of towards the top. But I kind of had this thing in the back of my mind from the last time that we talked, where I was like, Mars said we're not supposed to break out like this yet. And
Yeah.
so it seems like you kind of hit the nail on the head with that one again.
Yeah, it was a little bit tough. I have to admit that I wasn't that confident at the moment when we were at 72. I was like, I might be on the wrong side here, maybe once again, And when I saw the order book at 72K so heavy on the shorts, I started feeling some confidence. Maybe this is gonna push us back down, and we're gonna build an M pattern there at 72K with two tops, and maybe who knows. Also, we were heading into the FOMC meeting, and the FOMC meeting historically has been quite rough, even in this bull market. We have
Right.
had some big corrections during those instances. So maybe this is just one of those. Maybe it's gonna get bought up. We have here this chart courtesy of Gumshoe. 10% before the FOMC 11, 10%, and currently more than 4%. So we touched the 66, the high 66 at some point. And I think it's also a consequence of two things. Open interests were so damn high, all-time highs in open interest, the highest in the 18 months. And at the same time, the whales were depositing just like a party of deposits, no withdrawals. And then suddenly they stopped depositing and there were no withdrawals. And you know that at that point there's like a silence. Are they gonna dump or not? And I keep my breath there. I keep looking at CryptoQuant, Telegram, and seeing, oh my God, another 100 million, another 500 million. Well, of course, you could think that that's manipulation, but if you see so many whales constantly depositing, they must have something in mind, and maybe it had to do with the FOMC. Maybe it's gonna get bought up right after. We don't know, but I think it's good to keep an eye on the technicals as well, particularly on the weekly. We saw this this reversal. I was so excited to see a bullish cross on the weekly in here. I'm not sure if we managed to show this one 2 weeks ago. Let's
I
see.
don't think we did.
No, so we had in the bull market. Let me show the price so you can see the context. I'm gonna minimize this one. So bull market starts here at the bottom at 15K, and since then we had this bullish cross on the stochastic RSI weekly. Then we have another one here, another one here, another one here, and another one here. So I was quite excited and thinking, this made me doubt. This made me doubt definitely. I thought it might run. It might run further. It could still run. The Bitcoin does whatever it wants, but so far we are building a bearish cross here at the low end of the stochastic RSI, which is, if you look carefully, we haven't done it since the bottom of the bear market. So we had a bullish one followed by a bearish one, and that was a fake signal because it's a bearish cross, but that moved
Broke out.
us 88% up in very few days. So hopefully you didn't listen to that one. So the question is this one, number one, going to close bearish? Number two, if it does close as a bearish cross, is going to play out, or is it going to be like the bottom of the bull market that then we still carry on going higher? And it's a very tough one because there's so much liquidity at 70, above 72K, that it almost feels, and this is just a moonshot that I'm going to say, it might be the silliest thing I ever seen. I feel like BlackRock now is in the game and they might need to buy more Bitcoin. And there are all these hedge funds shorting the market. And somehow they have this whole equation to keep the price here because there's so much incentive right now for the price to go and take this. This is just there. We were so close, and we were like millimeters from igniting the largest short squeeze to go higher. That's why I was thinking maybe here I'm absolutely wrong. But somehow I got lucky because maybe BlackRock needs the price to stay here for a little bit longer. And they've been shorting the market and they are buying nonstop. And at the same time, there are the shorts. So they buy and the shorts put more open interest. So it's a very scary picture and no one knows for sure how it's going to end up playing out. But I see the incentive to go higher. There's so much liquidity here. But at the same time, I'm observing what is BlackRock doing? Buying like crazy. And these hedge funds are shorting like crazy. And the open interest is at an all-time high. So we have the perfect scenario for that short squeeze. It's just that it's still somehow being manipulated to not happen. No, not yet. Let's not go to 90K yet because we need to buy more. Let's say that's the case. Who knows?
Yeah, no, it's a great theory. I mean, you know, like you said, just above like that 72, 73 mark, like that could be an insane short squeeze. Like that with the amount of open interest there. I mean, I think like, are they holding it down in a way? Like it sounds like, you know, I could buy that theory, right? Like I could buy that. Like why wouldn't, you know, now that they're in the game, now that there's enough capital flowing around,
Yeah.
maybe that's the play.
Yeah, and it's crazy because we are believing every single word they say, and I'm monitoring this like many other people. I have other charts as well with the volume, but when I see this, there's enough here to move a lot higher, and that's kind of obvious. Here you have 800 million, then you have almost 500, and then again and again, and the price keeps coming lower. So
Yeah, or sideways.
the thing
This
is,
is kind of crazy, like the amount of influx of capital right there, yet Bitcoin sideways. It's pretty incredible.
yeah, and there are people speculating. You know, people are there's a lot of dumb people there, but there's a lot of intelligent people on Twitter that I follow, and I'm borrowing some things from them that I've been reading. And one of the things that is fascinating is when they say, well, they are declaring to us that they're buying all of this. What's the proof of this apart from some documents, maybe some legal documents that can be manipulated? What it cannot be manipulated is if they gave us the wallets. If they gave us the wallets and say, these are all the official wallets from BlackRock, and you see there that they are actually buying spot. And since we don't have that, unless you are internal in BlackRock and you know them, we start speculating. We start thinking that maybe they are just grabbing the money from retail and institutions and just doing their thing, you know.
Synthetic.
Yeah, maybe they are not buying. Maybe they are holding there, shorting, moving the price, speculating where they should buy and stuff like that. Nothing really stops them from doing that. Is very dangerous if they are doing that, because the price might eventually just explode and they miss the train, and then they declare they bought, but they didn't. You know,
You know,
I would
I
like
would
to.
love to, yeah, I would love to give the benefit of the doubt. It sounds like the fox is in the hen house there. You know, we let the fox in the hen house by launching these things, but it's so difficult with Wall Street, you know, to trust anything after 2008. It's really, really
Yeah,
difficult to say like, oh, we just trust like, and I think that a lot of the exchanges, crypto exchanges move to this kind of like proof of funds here and they dox their wallets because of this. Right.
yeah.
And so it's like, I mean, obviously these guys have like accounting standards and everything else that like we should be protected. But like you're saying, is there some leniency with timing where it's like, do they have to buy spot the second that someone comes in and buys like IBIT, right? Like, or do they have time? Like, I actually don't know. Do you know?
I mean, I will have assumed that they are heavily regulated and there are, certain strict rules they need to commit to. But since this is BlackRock, and there's no way I can confirm this thing. But you hear a
Yeah.
lot of things like BlackRock owns the Fed. BlackRock owns the SEC, and if that's the case, even if in some way, in a small way, it could potentially allow them to have more flexibility on how they operate.
hmm Yeah. I guess what we were saying is that seeing the inflows, it's not making complete sense to us where the price is sitting today based on that.
Yeah. And one thing favoring this theory is how much the SEC hated the idea of an ETF and a BTC spot, and they got away with it. And my point is they get away with everything. It's not a mystery anymore.
I like it. Like hey, we gotta go down the rabbit hole a little bit and flesh some of these things out. Um, but yeah, so last time you talked a little bit about, hey, you know, we need to kind of go down and hit a couple of different levels
Yeah.
before this kind of breakout. And I couldn't remember, was it like, did we just break through one of those levels? But I thought you said we needed to hit something in the 50s.
In the 50s.
Yeah, we
You mean
needed to
in terms
touch
of
down into. Yeah, we needed to kind of touch down to the 50s to make a couple of different like crosses there based on some of the TA that you were doing in order to get back to that high.
Yeah, I mean, we have this level here that
Yeah, that was it.
is a heavy magnet. If we continue getting resistance at these levels, it's gonna be pretty easy then in the future to look at that. I have another chart now that has a confluence with that. Let me see if I can quickly find it. Is this one. This one is fantastic. There's a developer on TradingView called Leviathan, and he
Mhm.
implements these beautiful indicators to do with open interest, funding rates, and all of these sorts of things that are helping me a lot to find areas of interest. And I've been backtesting them and seeing if they actually work, and they work beautifully. For example, here you have one that is called the Open Interest Footprint. It's free. You just add it to your trading view. And here I have it on the daily, and you can see where the open interest was more heavily growing or reduced by longs and shorts. And in here, you have the highest level is at 63, but then you have this big vacuum of open interest up until 42. If you didn't have this indicator, you can still figure that, of course, there was a lot of price action here, and of course, there's a
Mhm.
lot of price action there. And here we pass like almost in a tunnel of time. And when that happens, we don't leave any liquidity. Things happen too quickly. People people were just watching TV, and then suddenly the show finishes and the price is in another level. So they don't have time to put liquidity here. And the theory says if you went too high up, if you lose this range, then you're going to need to find a new range. And that could be potentially here in the middle, you have 1 million, or you just cut like butter through it and you fall to 6 million. It's impossible to tell. That will depend on how bearish are the things in the world, the macroeconomy, the FOMC, many different factors. But if there's enough motivation for the price to go lower, this will be a very strong level. It will be seen as we are back in the bear market. It's the end of everything. It will be a
Yeah,
massive
that would
capital.
not be. Yeah, that would be good.
How many people will cry out all night if they see Bitcoin at 42? And that's where you want to make your largest order, probably. But there's
Yeah.
an
Yeah, and we've been through that pain, right? It's like to go back. It's like you know that you're going to be back in that place again at some point. It's like, man, just give us a little bit more time before we have to go back down to that.
Yeah. The second thing, I'm not forecasting necessarily this one. I just know that we are still in a momentum down on the weekly, and we are losing some levels. You could argue that we are still ranging here, so we are making a big deal out of nothing. But since it's been so tough here, there are two types of interpretation. Some people, when you see that you're testing a level so many times, they insist that that makes the level weaker and we are just going to break it after so many attempts. And some other people say, well, it was too strong and we're just going to get rejected and crash down. So there's these two different theories. I think this level, this is the difference between continuation, and I've been saying it in my video. I say if we close about 71.5, we have big chances of igniting the short squeeze. But now if we lose these levels here and we close below once again, I think there's a high likelihood that we come for these levels. And now Bitcoin is so tricky because sometimes when you put support like this, you get this scenario that is also very common in Bitcoin, which is you build a flag, you trick everybody here, and you do just a liquidity grab at this level at 58. And from there, you pump. Just like we did this liquidity grab here, and then we came back down. So you have your range defined in terms of volume, and you do kind of the opposite from the other end. That's something that we saw here in the bear market. So in there, we started right from there. So we have the final range. We took this level, and from there, we push back up. So that's another potential thing. So you're gonna say, hey, but you have the three theories. We're going down, we're going to the middle, we're going up. So how you call yourself an analyst like that? And I think it's
That's actually what a great analyst does, Mario. That's what a great analyst does. They give you all three, and then you think they gave you a reduction. So you're good.
Thanks. But many people in my videos, they end up getting angry and they write these angry comments down below. But you are saying that we are going everywhere. I cannot take a decision like this. And the problem is that step number one, you put your most likely scenarios. You put them on the table. You say, on the table, I have A, B, and C. And you observe them and you say, okay, this one seems like it has a good chance, this other one as well, and this other one as well. Do you make a decision that moment? No. You wait and see. You see the price coming here and reacting to this. And what I would like to see, if we come here for a confirmation that we are going to go for that plan, which I will love personally, because that will mean that we don't need to wait for this to come to 42 and spend a full year there recovering, people leaving, more retail leaving.
Yeah.
It will be quite painful. I would like something, quick and then up.
Yeah.
Quick pain and then
Maybe
up.
a little less pain, or painless, hopefully. The one chart you did show at the beginning with the FOMC was interesting, and the 10%, I think it was like 10% down on kind of average, and then we're just at 6 right now, with the meeting 2 days away. So I think it's the 13th and the 14th. This is interesting. What do you think is driving this? Is it just that too much uncertainty and people are like, you know what, I just want my money out of the market when big decisions like that are made, and so it's just like, hey, I just sit this thing out, right? Like, what do you think is driving some of this?
I'm not an expert in macroeconomy. Actually, in university, I had to do the course twice because the first time I didn't pass. My main strength
Love
was
that.
maths and computer science and macroeconomy and economy. I really struggle, I have to say. But anyways, the point is, I think people are being manipulated by these events. You know, the events want you to think always the opposite. They try to sell you something that they do not want you to do. Currently, the S&P is running hot, all-time highs. You have Nasdaq. So those things are hurting the economy because people are just putting the money on those assets. And actually what they want is to control these extremes. They have a mess in the house. I don't want to offend anybody, but it's quite tough, to run an economy like in the US. But you have the inflation, you have the interest rates, you have people with less jobs, and everything is connected. Whatever you try to fix too much, you're going to break something else. You're probably going to break everything else. And therefore, the FOMC meetings usually tend to sell the idea that we're going to continue. They talk very hawkish, and they want to make everybody convinced that almost they're going to increase the rates. And people buy very easily on that. And fundamental traders that I follow on YouTube, that I really admire, they're great for reading in between lines on these things. Usually what they're saying is what you should be doing the opposite. And obviously with some caveats, but they are able to distinguish between they are hawkish because they really want you to do the opposite, and then the market is going to run. And in this case, you can tell that people are in fear on that, and then suddenly you see quite the opposite in terms of the narrative during the meeting. And right after the meeting, the market reverses all the losses. So I guess now people are also a bit concerned. I don't know why they are concerned now, because 99.6 or 5, something like that was the last reading. The outcome is going to be to keep the same rates.
Yeah.
So maybe what they are concerned is if they are going to confirm or not the cutting rates in July. And that might be the concern right now, because maybe they confirm and they say, no, we are not going to cut in July. We're not going to cut in the next 2 meetings. And that will be really difficult to swallow for people. And that's why they're concerned.
Yeah, they keep kicking the can down the road, and I think they're going to continue to do so. I think that idea of higher for longer is really kind of holding true, and will continue to kind of hold true. And I think, it Bitcoin, I think, has performed incredibly well throughout this environment, and I think it's like, if anything, everyone should be okay with rates higher for longer, because it's just more of like a springboard. Like, we're just coiling up even more, right? You just get another 3 months of 5% at your money market account. At some point, those numbers will come down, and guess where a lot of that money is going to flow to, right?
Mm.
Like, if you're not getting 5% or you're getting 2% on your money market, you're going to be investing that. And so there's a lot of capital that's just waiting on the sidelines for that. And we're already at these, like you said, like S&P and NASDAQ all-time highs, Bitcoin nearing and close to all-time highs at a moment when that's happening is really, really interesting.
Yeah. I think they have the incentive to to prevent that, and at the moment, and to keep a balance, but it's so tough, so difficult. I don't have the answer either. People complain, they have a mess, they don't know what they're doing. I don't know what I will do if I was sitting there, especially that I didn't pass the course.
Love that. So what else is on your radar right now? I know you did you did a kind of cool tutorial with our data that was released out onto TradingView. I'd love to like hear a little bit about what you did there and what you're kind of seeing with some of these signals.
You mean the data from
Yeah.
LunarCrush on TradingView? Oh yeah, that was really good news. I was so looking forward to being able to do this without needing to do any convoluted setup with connecting with the API, downloading, using their plugin to do something in-house. Now it's extremely straightforward to backtest signals based on social. I really love it. And I've done 2 proof of concepts. I wouldn't call this really a serious setup that I'm gonna run with my actual cash. But I found so interesting the idea that you can actually create successful strategies just purely based on socials, ignoring all technicals. Like I intentionally decided to not use any TA here. There's no RSI, there's no divergences, there's nothing. This is just deciding to enter into the market when the alt rank is too high relative
Mm-hmm.
to a value that is statistically too high for that coin in the
Okay.
past
Yeah.
150 days, let's say. So I have a look back. I look back 150 days and I calculate some percentiles and I say, oh, this value is too high. Okay. So it's underperforming too much for what it's been underperforming in those 150 days. And I enter along and then I do the opposite for exiting the deal. And it's not necessarily black magic. It's not going to work with all the coins. But finding 10, 20 coins where it works really well, for me, is promising. Because it means that if I put a little bit of extra work on this, I might make it very good to run with almost all the coins. I also did this proof of concept instead of doing alt rank. This one is trading just with the sentiment. So counter trading the sentiment when people are too bearish. Again, doing statistics. If you're too bearish, you take a long. If you're too bullish, you exit the long. And this one works really well. I have actually here the trading view backtest on Caspa. And here is my custom-made LunarCrush indicator.
Nice.
And I populated these metrics for now. These were the ones that I like the most for this sort of strategy. And I'm looking 3 candles back in time of 4 hour. And when I reach the 99 top percentile, then I'm entering a long. And here's an example. You see here, people were so over bearish at that point in Caspa that then it allowed me to do this run until they were too over bullish. So that is a
Nice.
decent 53%. Very simple. And
Very small
again, there's
percentage
no
there.
TA. Sorry?
Yeah, this is wild. This is wild. On the first one too. So basically, I love that idea because I've kind of thought about that one a lot with like you're finding the kind of like a standard deviation of alt rank, right?
Mm-hmm.
And so you're finding kind of like, hey, like what is the average that's there? And when it breaks, like when it gets too basically it's kind of similar to this. It's like when it gets too bearish on the alt rank, that's the long. Right? And then once the
Yeah.
alt rank gets kinda close and starts to run towards 1, which is the best, that's where the sell is.
Yeah. Yeah. That's
Yeah.
pretty much it. I'm not using the standard deviation. I'm using something quite equivalent, which is the percentile nearest rank. That says, in this case, if I'm in the top over the top 99% value, which is a value that is very rare, as you can see,
Mhm.
and it's also moving with the market. So if in the past 300 candles things start becoming more bearish, then this adjusts itself and starts coming back down,
Right.
and it waits for a breakout there. So it's not static like an RSI saying above 30 or below 70 that is just fixed. This quite adapts with the movement of the sentiment. It follows that sentiment in the long term. So it's pretty cool. It's again not something I'm necessarily gonna run naked like this. This is just a proof of concept, but it's very interesting that now whenever I develop a signal with technicals, I can complement it straight away just by adding this guy here, the TTP LunarCrush, and saying let's filter out by the signals that occur when the sentiment was awful. Okay, and let's see if that improves the performance. That's something that now we can easily do.
I love that. Yeah, I know you've been asking for this for a while, and it only took me about 3 to 4 years to make it happen. But it's not easy to get on TradingView, that is
No.
for sure. But I'm glad it's there because this is super interesting to see, that like it played out. And like you said, and it's what we always say. People are like, when they come to LunarCrush, they're like, I'm trying to find like all the value here. And it's like, well, it complements everything else, right? It's a vector now that you can look at that you didn't have before to kind of confirm maybe a little bit more of what
Mhm.
your kind of biases of what you're thinking. And so I love that you kind of already teased out. I know you've been working and like thinking about the data for a long time. So it might have been a little bit easier for you than maybe someone else that's brand new to the data. Like you understand like what alt rank is a little bit, where some people might be like, wait, number one, like it's going down. That's like a bad thing. It's like, well, no, number one's like the best. Right. And so, but also I think it's hard for people to understand like, oh, like number one should mean buy, right? It's like, well, no, that might be the sell signal actually, is when it's like overheated in the
Yeah,
market. And
yeah.
like we talk a lot about Bitcoin, on here, and it's like Bitcoin with some of our data is more like just kind of longer term, like swing trade, maybe months, where like our data with almost every other coin, like I'd say like coin two, like rank number 2 through 2000, it
Mm.
seems to have a lot more signal with those projects that are out there, right?
Yep, yep,
Yeah.
definitely. It took me a while as well to counter trade it. I mean, in the beginning, I was all into, oh, alt rank went to one, just buy it. And you know, you learn the hard way. After there's a bear market, I'm sure that people learn quite a few things as well. In my case, that was the biggest learning, that the alt rank or the sentiment, the opposite, works pretty well.
Yeah, it's like the momentum. It's like the momentum of it, and I think that's where you got it right. It's like, hey, if something has an average of, if it kind of bases from like 150 to 350, and it's alt rank, that's usually kind of where it's at. It's like once
Mhm.
it nosedives just out of that zone is when you pick it up, and then once it's like starts to return back to the average zone, that's when you sell it.
Yeah, I love seeing the signals, because this is telling me in the price here that people started getting a little bit depressed. But it's funny because you see the price, and I can imagine everybody saying, "Oh my God, we are going lower." And if you get 99% of them saying we're going lower, guess what? You're going higher. And the same in these little places here as well. It's very interesting. Psychology in the chart.
Yes, I love that, and I can't wait to see what else you kind of come up with now that you've got the data a little bit more in tune with the way that you operate and the way that you work, which is really cool.
Yeah. Yeah, I mean, at the moment, I'm looking just at the two extremes, right?
Mhm.
Exaggerated bearishness, exaggerated bullishness. But I'm also thinking into more sophisticated things, like small changes and small things. But for that, I'm gonna need a little bit more time to research more. This was a low-hanging fruit, and it's very exciting that it works and that is available. Thanks to you.
Hey, glad we can make it happen for you. So what are like, we're sitting here now, Bitcoin, 66.3.
Mhm.
Um, what has changed since the last 2 weeks that we talked a little bit on Bitcoin and like the market in general and kind of where you're thinking, like what's changed in your setup and where are you kind of focusing on in the next like 2 weeks?
Let's have a look. So big macro elements here. This I pay respect to the MAs. I'm not an MA guy. I like other indicators, but I pay respect to them just because there's so many people looking at this, particularly these three MAs on the daily. You got the 50, 200, and 300. And yeah, right now we are losing the 300. There was a bearish cross there. So the red one is the 300. The orange here is the 200. We are doing a perfect bounce there at the 200 and now being rejected by the 300. So that is looking like there should be some continuation down. Hopefully we bounce at the 66 here and we continue, but we are getting sold at the moment. I was getting excited that maybe we're gonna go there. In the long term, on the daily, we also have too many bearish divergences and we still don't have any bullish one. We don't have anything like here, for example, that we have 10 bullish divergences and we started building up this range. So we need to see what's going to happen in this box. Today, for example, closing below 67, which was resistance, and it should have held us. It did around there. But if we close today below that, there's a high likelihood that we go to 62. That was support here, and it's the target from this M pattern that we just completed. Of course, if by tonight we see a really strong reaction here and it gets all bought up and we end up in a green candle, I take all my words, of course. But if we close below here, that's where we are in danger. And big things happening. We have the hash ribbons on the weekly that you struggle to find areas where after a month or so there's no upside. It's very rare. This is a very high quality signal coming from on-chain data. It looks into the capitulation from miners, and at the moment you can see we are in this red area. So what we need is this MAs to do a bullish cross, and then typically after a couple of weeks, because I have the chart in the weekly, I trust it more, then you tend to have this buy signal. And after that buy signal here, the last one was a 15% drawdown. But then if you can stomach that, then you get 150% up from the signal. And this one was in the middle of this pump. And even during the bear market, you have some upside. Previous bull market, most of them really bullish, like 90% of them are very bullish.
You said this was the rebalance, the hash rebalance?
This is called the hash ribbons. The name is written here on this area. And it's a very famous indicator that uses on-chain data. It looks into the hash rate. Let me see if I can pull in the detail. It was created by this guy, Caprioli Charles, quite a long time ago in 2019. And it talks about miner capitulation yields wonderful returns. The best buy signals occur when the hash rate recovery and when the price momentum is also positive.
Gotcha.
And he figured this in 2019 and it's still working, beautiful. It's really great. So I'm hoping that soonish we are going to get a buy signal. Sometimes you don't get a signal like here. You just skip the signal and you're in recovery mode and then nothing happens. But hopefully here we're going to get a buy. And ideally we get that buy after also some sort of pullback. So that pullback kind of gives you more confidence, because if you don't get that pullback and you get the buy signal at this top, you could still come down for a pullback like this shakeout there. Sometimes it happens. So be prepared. Don't assume, oh, buy. Okay, it has to go up. Sometimes it doesn't. It just has a high likelihood that there is a recovery, a strong recovery after the signal and after some drawdown. Totally unknown what's going to be that drawdown. And so I'm looking into that. That one is a big one. I wouldn't ignore this one. This has a very high win rate. And I'm also stopping to look into the ETFs because I see them positive and it's not having any impact in the price. And also the end of the week to look into this bearish cross or bullish cross, depending. That's also going to help us a lot understand where are we going. If we get that confirmation of the bearish cross, probably we're gonna get at least one more month of struggling, and hopefully July we're gonna start seeing something similar to what we see during July months, which is typically on the green side. Currently this hasn't been updated. Probably it's gonna be break even or maybe slightly in the negative.
Yeah, the slight down.
It's not, yeah. Let me refresh and see if this is already updated. Yeah, is 299. It's on the orange, and yeah, the previous June was 12%, and we will have to see probably June. Yeah, it was pretty red even in the bull market, but then after that you get July, that is most of the time bullish, and here as well. So we should do an average probably of bull markets in July to figure what could be the expectation for July, but be prepared for things being upside down, because in 2024 we have a lot of upside down here expectations. I still look at this, but I don't make my decisions from this.
Yeah, this is such an interesting chart too, because looking at 2021 to like, it's almost like the bear market started in like November there. Like, even though we were up in 21, it's like that year was like kind of all over the place. And then like 22 is obviously just like a nightmare. But it's like when you kind of add that in also with like the first half of 23, like it was really like almost like 700 days or 800 days of bear market. But it's just
Yeah,
interesting to look at this and know like, oh man, there's only been 3 down years of Bitcoin like ever, which is crazy to think too.
yeah,
Man, 2018 was rough.
yeah. I wasn't in 2018, but I remember in 2022 watching some YouTubers, particularly Benjamin Cohen. I really like him. I think I mention him all the time. And
Yeah.
I remember watching the videos in the beginning of 2022, and he was saying, guys, expect like a 70% or 80% of the months are going to be red this year. And I was saying, no, it's impossible. Please, God, no. And then you start seeing this, and then saying, well, because we already have this green, we only have 2 months, it has to be red. And it was red. Sometimes
Yeah.
you can use this and it works, but not all the time. So it's not very
Yeah, very random.
accurate. Yeah.
Amazing, man. Anything else you wanna show us before we wrap up here?
Let me have a look. I think well, we are done. This week is gonna be just a roller coaster of volatility, the FOMC, the CPI, and then we got the PPI. So that is going to secure you at least some fun for this week, because I hate when the price doesn't go anywhere. My bots don't do anything. I keep checking everywhere. Nothing is going on. So good for volatility.
Yeah. Yeah, volatility. Any price action is good action for you. That's what we like to see.
Yep. Yeah, we'll see what happens tomorrow with the FOMC meeting. I think that is going to be really interesting. Thanks so much for having me, Joe.
You rock, man. I appreciate you hopping on here, and thanks everyone for listening. We're gonna keep bringing Mariano on and having some fun talking through charts and everything. So thanks everyone for listening out there. And then Mariano, where do people go to sign up for your service? I want to make sure everyone knows.
If you want to watch just the videos, you can find me as the Trading Parrot, obviously on YouTube. Trading Parrot is my handle for Twitter without the, just Trading Parrot. And on the website, thetradingparrot.com, you can have a look at the different indicators I have. I have a big gallery with 100 different indicators, including the LunarCrush new one. And if you want to dig into what is all this information and you want to ask me questions, just find me in my Discord server. The link is in the description of any video, and then you can contact me directly, join me for AMAs and different things.
Amazing. Awesome, man. And thank you everyone for listening out there, and we will talk to you next time.